Welcome everyone, thanks for joining. We've still got plenty of people joining us, so I'll just give it another minute or so and then we'll kick off the webinar. Thanks for your patience. Okay, let's kick off today's webinar. Thanks again for joining us. We'll be talking today about the CreditorWatch Small Business Risk Review, looking at Q3 2018, the calendar year just gone. Where is the year going? It's going very, very quick. So just a quick one, my name is Patrick Coughlin. As most of you regulars would know, I host the majority of the webinars, particularly the Small Business Risk Review. I'm the MD at CreditorWatch, and according to my marketing team, as you can see, apparently I have poor taste in coffee. They don't agree with the cafe that I go to, Barista versus Chef on Clarence Street. I highly recommend it. Before we get started as well, the usual T's and C's around the webinar itself. Q&A, we don't have people standing by today. We're quite under the pump at the moment, coming towards the end of our third. We break the year up into thirds, and also a couple of conferences that are happening. One, the AICM conference this week, if you're attending, fantastic. Two, there's another one next week called COBA, the Banking Association space. So we don't have people standing by. However, we will get back to your questions. So if you do have any questions along the way, please don't hesitate to ask away, and we'll get back to you. Similarly, the slides and the webinar recording itself, we'll have that sent to you within the next 24 hours. The session, we've got 30 to 40 minutes here. It's probably 20 to 30 with the Small Business Risk Review. Not too much demonstration. Very positive this month as well, which is nice to see. Usually it is quite well, it's not negative, but it's more on the negative side. But other than those in Victoria, all the states are looking very positive, looking at our indicators and our data sources, and also speaking with companies around Australia as well. So we've got our agenda here, a little bit about CreditorWatch to kick off with. I'll talk about Small Business Risk Review itself, where we get the data, and then we'll get stuck into that straight away, looking at all the results that we've seen come through, comparing Q3 2018 to Q3 2017. Of course, a couple of poll questions along the way as well. So, as most of you know, CreditorWatch is Australia's leading, and I've added in here, most innovative credit reporting bureau with over 50,000 customers across Australia. Our main products include the most obvious ones and those core to a credit reporting bureau, the credit reports themselves, scores, monitoring and alerts. And in the past, you know, we've added a lot more supplementary products to that core credit reporting product as well. DebtorLogic Plus allows you to analyze your receivables as a whole, your whole portfolio itself, and is our trade program. Bankruptcy Plus allows you to assess the individuals behind a company. So we integrate all of the bankruptcy data from AFSA into the commercial credit report, so you can see sole traders, partners, and directors who are currently or may have previously been bankrupt. Apply Easy is our online credit application, which integrates with CreditorWatch itself. Our newest, biggest, shiniest, most innovative product that we have released is PPR Logic. As it says here, it's a dedicated solution for all things PPS related. So it is the ultimate portal to manage your PPSR registrations, create new ones, get alerts when you've got ones coming up for renewal, be able to discharge and make amendments, that sort of thing. It integrates with CreditorWatch, so when you're looking at a credit report, 2 clicks will allow you to register a security against that particular entity. It integrates with Apply Easy, so when you are onboarding a customer via an online credit application form, when you get to the approval process, click approve, you then have a nice easy pop-up that says, do you want to register this on the PPSR? Yes or no, bang, 1 click, and that is done for you. And obviously all the required certificates and whatnot come through to you once you have registered as security. Before I get into this one, actually, we've had quite a number of other products that we have released. It's been a really big quarter for us, particularly for our superstar dev team. Have been releasing either new products, features, upgrades, getting through little bugs that pop up here and again. You would have seen, if you're a customer, adverse cross directorship. So the idea behind that is, if you're monitoring ABC Proprietary Limited, of which John Smith is a director. If John Smith has other companies that he's a director of and they get into financial difficulty or get wound up, go into administration, that sort of thing, we'll actually provide you with those proactive alerts on John Smith's other companies. Because ABC might be the last one standing, you want to know if his empire is crumbling around that particular entity that you do business with. We released a video, a nice cheesy video, obviously, for those who've seen it. 10 million credit reports sold since we launched in 2011, a huge milestone for us, and we will continue to obviously improve and sell more of those over the years. So I just wanted to say a special shout out to our superstar dev team. It's been a huge quarter for them. Thank you, guys. Looking at the small business risk review itself, we try to pull in data from as many different sources as possible, okay, and give you key insights and trends that we're seeing that have occurred in that quarter. Typically, we are comparing it to the quarter from last year, as in credit, debt. We do see big cycles throughout the year, and we tend to find that the quarter-to-quarter comparison works a lot better than just looking at it on a rolling annual basis, particularly coming into this next quarter with Melbourne Cup is obviously the start of the silly season traditionally for corporate Australia and to be honest for most of Australia. And I don't know about you guys, but I find that Australians don't do a lot of work, or they certainly down tools a lot earlier and more often through to Australia Day from Melbourne Cup. So we see almost 3 months of slower productivity than usual, with exceptions being in probably retail, with plenty of shopping done for Christmas, and obviously hospitality as well, as people tend to go out, eat, drink a lot more through the summer months. So looking at a variety of sources that we do pull information from, the core government-related ones, ASIC and the Australian Business Register, and also we added recently AFSA, which is providing bankruptcy information on individuals. We're getting court actions from around Australia. We're pulling insolvency information from the Insolvency Notices Register, which is administered by ASIC. We've got debt collection notices obviously coming through, and also payment defaults, trade payment information. So we will start to look at introducing either slightly different analysis of the way we look at the data or the way we're reading it and presenting it. However, the feedback so far from our listeners and our people who download the Small Business Risk Review infographic each quarter is it is working for them at the moment. But we're always open to feedback. So use the Q&A box or shoot me an email. patrick.coughlin@creditorwatch.com.au, or chat to your account managers and business development managers who look after you. We're always keen for feedback. Let us know what you would like to see. So let's have a look at the first poll question. How would you rate the trading conditions of the last quarter? I'm quite interested to see this before we actually get into the stats themselves from the Small Business Risk Review, because it certainly was saying to me the last quarter was very positive from a analysis of the data coming from our various sources. However, we've had a change in Prime Minister. We've got a potential trade war between China and the US. The stock market recently has certainly seen a big downturn for technology stocks. It has been quite chaotic, I would say, in the last 3 months. So always keen to hear what people in the trade credit world are saying. So looking at the results here, 35% of you saying positive, 16% negative, which is always good to hear, and neutral. I think neutral is probably, you know, a really good summation of the last quarter, and probably what we're looking at for the next, you know, 3 to 6 months as well. There's certainly a bit of uncertainty out there, but not necessarily negative. People are, you know, are waiting to see what is going to happen. Obviously, the other big thing to note is the downturn within the property market itself as well. So thank you for that. Let's get into the rest of the presentation. So as I said, Victoria is probably the exception to everything that I'm going to show you today. Everywhere else we've seen improvements or decreases in the number of court actions and the value of those court actions as well. As you can see here, Queensland, some good news for them. You know, they have done it tough for the last you know, 12 to 24 months really, with a number of, you know, downturns in mining and property and natural disasters. New South Wales continues to see a reduction in court actions versus, you know, the quarters from previous years, which is fantastic news. Obviously, the biggest state, the most commerce happening. I think the rest of Australia sort of looks to New South Wales to hopefully see, you know, if there's positive signs from there, it's positive for the rest of the country. WA, similarly, we're seeing a huge reduction in the number of court actions and the value of those court actions. I've always sort of pinned WA as somewhat similar to, you know, Queensland, given their exposure to natural resources. Good news there, and you know, we're obviously keen to see what does happen with the pending, or I guess the cold trade war at the moment between China and the US. We're very much reliant on China for the natural resources that they gobble up, majority of which is coming out of WA. Victoria, as I said, the exception to what we're looking at today. We've seen an increase, 10% increase in the number of court actions versus Q3 last year. In Q3, there was a big jump versus 2016. And the value as well, it's quite a significant 20% jump. So Victoria, you know, always keen to hear from you guys. Is that what you're seeing on the ground? Is it a precursor, or is this, you know, the sort of trailing end of a tough sort of few months there? And what we're seeing is, you know, debts that were being chased for some time are now turning into those court actions. We know what the next thing, the next step past the court action is, obviously, you know, winding up in insolvency. So it'll be interesting to see if we see an increase in insolvencies from there in Victoria. SA, a nice little drop there as well for them, and they've been fairly consistent over the last 3 quarters as well. Now, we introduced this 1 or 2 quarters ago, cancelled unincorporated entities. So a really important, you know, graph or insight for us, in my opinion. Very often, you know, reports and quarterly analysis and that sort of thing focuses on the corporate sector, the proprietary limited companies only, not taking into account unincorporated entities, which made up of sole traders, trusts, and partnerships. And typically these are the small businesses, micro businesses that exist in Australia, and we know that, you know, it's 90 to 95%, depending on, you know, which government source you go to, makes up about that percentage of small and medium businesses in Australia. So it's always really important to see what is happening with them. And after a huge increase Q2 earlier this year, we've seen a huge decrease, 73%, versus Q3 last year. So that's really good news for small business owners, operators, but also for any of our customers out there, or any companies that have a high exposure to SMEs within their portfolio. You should find, you know, this is a really positive stat. Give you a little bit of confidence moving into, you know, what is quite often a tough end of the year for those of you outside of, you know, retail and hospitality. Obviously, we know everything slows down. So with that in mind, we've just got little notes here. It's obviously end of year fast approaching. We know that Christmas, everyone's spending, trying to get in sales in that retail hospitality space. Everyone else is a little bit quieter, and as a result, we see that payments really do typically start to balloon somewhat, because either they haven't got the numbers they expected through the end of the year. We know December, Jan, a lot of people are going away, so sales are down. Plus, it's also just difficult to get a hold of people in accounts payable, for example, or business owners that owe you money. So we're recommending, despite the positive frame that I've provided here through these stats, at that time of year you always want to be really aware and well placed to shoulder any ballooning in payments or slowing in payments, because what we always find is come Feb, March, there's always an increase in the number of insolvencies as people have realized they haven't been able to get the money in that they required, haven't got the sales, and then obviously the domino effect of that through the economy. From a payment default point of view, again, fairly flat compared to Q3 2017. Not a huge difference there at all. We're obviously working quite hard in this space. Whenever I talk to customers, big or small, they always say, "Oh, Patrick, we want to see more payment defaults," and I agree with them. I want to see more payment defaults, and I think the challenge for us is always, and the challenge is always for us, but also our customers. If you want to see more, you also have to contribute to that as well. And we've made changes to the defaulting process, removing questions, removing potential hurdles that people were saying were in there. They want to make it easier to upload and register defaults, and they want it to be easy to manage those and update them when they get payments. So we've done that recently. So hopefully, as a result of that, we start to see more people register defaults, and as a result of seeing more alerts and more defaults on credit files, that will encourage people themselves to register them. So it's a somewhat self-fulfilling prophecy. I just wanted to jump in and give you a quick example of what it looks like for those of you that submit an age trial balance on a regular basis, monthly basis, or have integrated Xero and MYOB. The CreditorWatch system will actually flag invoices we have deemed to be overdue and eligible to be defaulted, registered as a default. Takes you through to a list. It couldn't be any easier. You select the default, or you can select them all and then click register, and that is done. Just as a disclaimer, this is obviously just a demo account, so if you do see a name here, I apologize, but just a demo account, not actually going to register default, so none of these people are in default. But yeah, as you can see, really easy there to work through that. I appreciate that not everyone registers default at 60 days, not everyone registers them at 90 days, not everyone registers them full stop, but even if you can just register those ones that you are writing off or you deem will never get paid, it makes a big difference to the other CreditorWatch users, and ultimately, that will come back to you in spades as well. And you can obviously update them if payment does come in. It's a really powerful tool to use for leverage. If you want more information, there is a link within the slides that we will send through. There's an article on the blog itself. Insolvencies. Insolvencies have decreased. It's actually by 10% in comparison with Q3 2018. So good news there. What we like to see is positivity coming into the end of the year. So we're certainly seeing that across the board, other than Victoria. Apologies to my southern neighbours. It has been a really positive small business risk review in my eyes. Lots of downward facing triangles, which is what we always like to see. Bankruptcy, so looking at the individuals, new bankruptcies across Australia have decreased. Ignore that, Western Australia. Everything is really, really, really flat here, as you can see. Percentages wise, they don't really tell the story completely because we're not seeing huge differences. So if you just look at the number differences there, you can see that the volume, there isn't a huge change. And again, there has been a decrease of 9% nationwide as well, after we saw some increases in previous quarterly reviews that we've performed. We've looked at two other report providers, two other indexes, or one's an index, one's an insights report. The first one from Xero. They obviously get access to some fantastic information, as they can see, payroll, payables, receivables across all of their customers. So their October report showed that improved digital, or this is the reason for it, that showed improved digital connectivity is driving business growth, which is great to hear. So automation, cloud-based apps, streamlined online platforms have enabled SMEs to work more efficiently. We know that a small business or even a medium business, you tend to have, the MD or a couple of managers wearing multiple hats. And as a result of that, they either forget to chase dollars, they forget to pay dollars, or they can't focus enough on sales. So by creating that effective efficiencies, through automation and technology, they're obviously got the ability to grow at a faster rate, which is really good to see and is really important for the whole economy, given the importance of SMEs to Australia. And looking at the Census Business Index, this is for June 2018. They haven't released their most recent one for this quarter just gone. SME confidence has been at its highest level since 2009. Confidence by state has risen, except for Victoria. Sorry about that, Victoria. And confidence by sector has increased as well. I really like this. Even retail, I should have bolded that, because retail has really been the whipping boy amongst industries alongside construction for a very long time now. So it's good to see a little bit more confidence coming back into that space. However, despite all this, small businesses, no surprises here, are still finding it difficult to access finance, despite the increase in the number of, alternative lenders that have popped up over the last few years, the fintech, so to speak. Small businesses still finding it more difficult to access finance. So that pretty much wraps us up for today. Short and sweet, as I like to keep it for you. One last poll question here that I will ask you. How did you find today's webinar? Or did you find it insightful? Hopefully it's a yes. If it's a no, that's fine. I always like to take on constructive criticism. And as I said, please do give us feedback, either in the Q&A box within the GoToWebinar control panel, or just, next time you speak to someone from CreditorWatch, just let us know that it wasn't what you wanted it to be, or hey, here's some ideas, or why don't you look at this sort of data? We're always keen to hear what you would like to see from us. So thank you for that. Good to know, 98% yes, 2% no. I hope that 2% let me know where I can improve, because I'm always keen to do that. And before we sign off, just a little bit of an update with some upcoming webinars. So towards the end of this year, we've got another webinar where what we're calling diving deep into payment defaults. So we're going to look at the results of releasing that new feature. Have we seen obviously an increase in defaults and volume and value, but we'll also get some case studies from a couple of customers, so that we can actually present to our listeners exactly how powerful the defaulting process is. So we've certainly got two of those ready for you. We're going to look at our data wash again webinar. That'll be coming soon. Automating customer onboarding with Apply Easy, as we run those fairly regularly, and probably another PPSR related webinar, given the important date, 30th of Jan, coming up, where the 7 new renewals will be due. As always, speak to CreditorWatch and we can help you out if you've got any questions, or need a provider for those tasks. Today's resources, we're going to send out infographic, the presentation that we're looking at now, and a recording. If you've got any questions or you want to chase up for some reason, give us a couple of days. Webinars at creditorwatch.com.au. Sales inquiries, go through to admin at creditorwatch.com.au if you don't have a direct account manager or BDM to look after you. And as I mentioned earlier in the webinar itself, the AICM conference in Melbourne this week, kicking off tomorrow, so Wednesday, Thursday, Friday. If you're attending, please do come past the CreditorWatch stand. We're there every year, and completely unbiased comment coming here. We're certainly the most fun stand, put on the best show. plenty of prizes to give out. T-shirts will be back again this year. We've got some after party invites, so just come to the stand and fill out a form, say hello. I'll be there on Thursday afternoon, Friday morning, and there's plenty more available at the AICM conference. So that takes us to the end. Thanks all for attending. Always appreciate your time. Everyone's busy, so I do appreciate that half hour that you do give to us for the Small Business Risk Review. And I will speak to you soon. Have a fantastic day.